Good afternoon, everybody, and welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what is going on. And again, yes, I just read the news. So if you're looking for great insights, let's do some techno analysis. I see the price and I show you the news. And last week, yeah, it was kind of scary, dippy. Bitcoin was dipped at 93, 92. What was our lowest point? Right now, we're currently at 92,000. Let's take a look at the weekend chart. So okay, we never got any lower than that. So right now we're at our low peak. So people are selling, but again, I'm still bullish. I don't think we are done with the market. And also, I think hopefully I'm clear on this channel. Again, I'm always checking to make sure we have a clear, crisp live stream, and it does look pretty crisp. And I think I finally solved the reason why. My switchboard was overheating. So yeah, so that's why it always turn halfway blurry and whatnot. But we are back, we are crisp, we are clear. I have a little ice box underneath it to keep it cool. So we shouldn't have any blurry video quality, and you can read along with me. But yeah, so I'm still bullish on Bitcoin and all the news out there. We have breaking MicroStrategy bought another 8,178 Bitcoin for 835 million. So he bought the dip, and he said that over the weekend too. He told us that he was dispersing the rumor saying, oh, Strategy's selling their Bitcoin. It's no, we're actually buying, and we'll be back with you guys on Monday for how much we are buying. And here we go. The 8,000 new Bitcoin off the market. So if you sold your Bitcoin, you were selling to Strategy and a couple other whales out there. So whales are still buying and controlling it. And then also in the news, we have Harvard University holds more in Bitcoin ETFs than it holds in shares in Microsoft. So Harvard University bullish on Bitcoin. Well, they're holding what are they holding? They're holding the ETF version of it. So they're not actually holding Bitcoin, but they're having a little, how do they say ETFs? It gives you exposure. They have a little bit of exposure in Bitcoin. And hold on, let me turn on this light. I want my lights turned off over the weekend. There we go, my green little bullish green arrow sign going up. But yeah, so Harvard's bullish on Bitcoin as well. And then let's see, Japan's FSA plans to classify Bitcoin and crypto as financial products, lowering the tax on crypto gains from 55% to 20%. This is bullish news for the country of Japan, because now, again, taxes got cheaper, making you go, let me go buy some Bitcoin now. So, and if they get a gain, they won't be taxed so hard anymore. So this is definitely bullish news. And then also breaking, 95% of the total Bitcoin supply has now been mined. So there is just 5% left. I thought we were down to the last 2%. Well, I guess we're at the 95% mark, because the total is 19,949,776.16 Bitcoin have been mined. Is that correlate with our Bitcoin chart up here, 19.95 million? So yes, it does. But yeah, let's talk about this in our very first news article on 95% of the Bitcoin has now been mined. Here's why it's important. So with just under 2 million in Bitcoin that will ever be mined from here on out, Bitcoin's real story is about to be unfolded. Now, Bitcoin's total circulating supply has just crossed that 95% of its 21 million hard supply cap, which is a massive milestone baked in nearly 17 years ago, when the creator Satoshi Nakamoto mined the Genesis block on January 3rd, 2009. Now, with 19.95 million Bitcoin now in circulation, this leaves just 2.05 million Bitcoin left to be mined. And the question is, what does this mean for future Bitcoin and its price? Now, speaking to Cointelegraph, Thomas Perfumo, a global economist at crypto exchange Kraken, said it's an important milestone in the Bitcoin narrative, because annual supply inflation is currently around 0.8% per annum, and hard money requires a credible narrative for people to confidently adopt a currency as a store of value. Now here's Bitcoin annualized inflation rate, and it is expected to decline as its supply diminishes. So Bitcoin's uniquely combines its functionality as a global, real-time, and permissionless settlement protocol with the certainty of authenticity and scarcity you expect from a masterpiece like Mona Lisa. Now, this milestone is a reminder of Bitcoin's resistance against debasement and intervention, operating as designed nearly 17 years later, said Perfumo. Now, 95% of the Bitcoin supply issued won't alone pump the price, so don't expect prices to go up right away. But it has been speculated that by limiting the entrance of new supply, each coin's value should increase as demand increases while supply is choked. However, Jake Keynes, a senior research analyst at on-chain analytics platform Nansen, said that the milestone is unlikely to immediately move the market. It does, however, validate that Bitcoin's digital gold narrative and highlights how core holders and institutional players are locking up limited supply for long-term holdings. Now, here's a chart of around 17% of the Bitcoin supply is held by companies and countries, and it's sourced from BitGo. So we have ETFs with 1.5 million Bitcoin. Countries hold at least 517,000. Public companies hold at least 993,000. Private companies around 426, and Bitcoin mining companies 120,000, while DeFi products out there 267. It emphasizes Bitcoin's scarcity, but the remaining 5% still will take well over 100 years to reach the 100% circulation due to the halving events. Now, while increased scarcity can psychologically support these prices, this particular milestone is more of a narrative event than a direct price catalyst, said Keynes. Now, the real story isn't that the 95% number itself, but Bitcoin's supply schedule working exactly as designed. It is predictable, it's scarce, it's an era of unlimited fiat money printed. Now, based on block discovery rate and halving process, which occurs roughly every 4 years, or 210,000 blocks of transactions, the last Bitcoin is predicted to be mined around the year 2140. Now, the supply milestone is a sign of Bitcoin's maturity. Marcin Kazmierczak, the co-founder of blockchain oracle Redstone, also believes that 95% of the milestone is unlikely to be an immediate price catalyst. Now, as Bitcoin supply dynamics are already well known, tokens have been released over the past decade and markets have gradually absorbed them. However, he said that the milestone highlights why scarcity matters for Bitcoin's long-term value, and traders should be more focused on whether the infrastructure supporting it can scale the support to the next phase of the institutional integration. Now, what matters more is macroeconomic context, adoption trends, and regulatory clarity than hitting an arbitrary percentage threshold, said Kazmierczak. He said that the real inflection points were earlier in the supply curve. Now, what this does represents is Bitcoin's maturity dash, and we're moving from a growth phase asset toward one with fixed, predictable, long-term scarcity that's valuable for institutional adoption, but it's not a market-moving event in itself. Now, miners could be forced to change that soon. A price spike might not be incoming, but Kenneth said that the dwindling supply is likely to increase the pressure of miners who are already feeling the pain from April 2024, having which reduced the reward for each block to 3.125 Bitcoin. Now, here is the Bitcoin halving chart showcasing that. So the years were 2012, when Bitcoin was first around, you received 50 Bitcoin from that time, but it was reduced down to 25. 2026 went from 25 to 12.5. 2020, 12.5 to 6.25. Now we're at the year 2024, which we reduced down to 3.125. Now our next one should be aligned with 2028's happening, where we go down to like 1.52. And then after that, in 2032, we're under one full Bitcoin per miner block. But miners are already feeling the impact of the reduced block rewards from halvings. Most recently in 2024, forcing them to rely increasingly on transaction fees for profitability, he said. So this 95% milestone underscores the long-term transition, potentially pushing out less efficient miners, while the network hash rate still typically recovers quickly. Now, Casimir shared a similar view, stating that as a supply growth slows dramatically, the economics of mining will undergo a fundamental shift. He said, we're transforming from block reward dependent miners to transaction fee dependent miners. This creates pressure on miners to consolidate or seek efficiency gains again, he said. So we are definitely moving to that phase where it's just not relying on the new miners coming in or the new blocks coming in for a minute. Like when you solve a block, you get that 3.125 Bitcoin. But we're starting to get to that phase where we're not relying on that, but mainly from the transactions that happen on the whole Bitcoin blockchain. Because people always say, when the final Bitcoin gets mined, how is this going to work out for miners? How are they incentivized? Well, they will be getting a share of transaction fees. So when you send Bitcoin, there's a fee to it, whether it be 6 cents or 50 cents. A portion of that will go to the miners. So that's what's going to take place, but that's where we're seeing the shift happen now. So it's starting to become important that we treat Bitcoin as a currency, and that way it keeps the network fulfilled, or not fulfilled. It makes the network, it makes the whole ecosystem more secure, or just it makes it run on its own? Really, I'm not sure how I can explain that, because instead of just relying on the new Bitcoin, like, oh, that's and here's its value price, we need to rely on actually treating Bitcoin as a currency. Go to Stake and Shake, spend your Bitcoin there. Go use Square. Like any merchant that uses Square can now accept Bitcoin. Find these places, and then we always say never sell your Bitcoin. That's the thing to accumulate growth. But you also want a little pile that you can use for everyday life. And then also when you spend it, just replenish it. So treat it as a currency. When I mean that is like you go to Stake and Shake, you use your Lightning wallet, you paid for your meal. After you spent the Bitcoin, just go on Cash App, spend the $20 you spent on that meal, put it to your wallet again. Boom, you use Bitcoin as a currency and you still kind of replenish it. So you're still holding on to it. And that's what we say when you do that. But no, so that's what's going on with 95% of the Bitcoin is mined, and it's not going to be a catalyst growth for the price action, but just a transition from where we're at. Now let's talk about the young Bitcoin holders out there who are panic selling at 148, who panic sold 148,000 Bitcoin as analysis call for sub 90,000 price still. So are we at the bottom? Now let's see, more than 148,000 Bitcoin have been sold at a loss by short-term holders, adding fuel to analysis predictions that Bitcoin's price will fall under 90,000. So are we still going to see that? We might, but this could be a short-lived dip if we do go there. But Bitcoin's price dropped to $92,000 on Sunday, erasing nearly all this year's gains as the end of the US government shutdown failed to improve investor sentiment. Now, this has led investors and traders to reevaluate their risks and stay cautious with the most recent buyers selling their Bitcoin at a loss. But this is just Bitcoin weak hands and their realized losses. So this is why we always say it's easier to be a long-term holder than a short-term holder, because these short hands who are just like always trading, they're doing losses now. But Bitcoin has retraced 25% from its all-time high of $126,000 set on October 16th. Now, the drop below the 50-week moving average and the weekly close below 100,000 for the first time in 6 months have cemented a more risk-off stance among Bitcoin investors. Now, on-chain data from CryptoQuant show that over 148,000 Bitcoin held by retail or newer entrants, those with less than 1 million Bitcoin and having held for less than 1 month, were sold at a loss on November 11th. So yeah, people who got in at the top and then they're seeing prices go down right now and they're getting shaken. So it's like, oh, I got to sell. I'm going to lose my money because they got in for the wrong reasons. They were hoping to make money instead of realizing like Bitcoin's a way to change like everyday life, being in full control of your money with freedom behind it. It's just people got in for the wrong reasons. And yeah, you can make money in the long term of it, but the short term people who just got in thinking they're going to make a couple of gains, it's like, no, you're doing this wrong. The on-chain data from CryptoQuant showed that over 148,000 Bitcoin held by retail new entrants with less than 1 million Bitcoin have sold less than a month ago. Now, the fire sale occurred with Bitcoin at roughly $96,853, a level far beneath their average purchase price of between $102,000 and $107,000, said CryptoQuant and analysis at Crazy Block in a quick take analysis on Sunday. They also added that this was not profit-taking. This was a significant loss realized on a monumental scale. And here's a chart showing Bitcoin holders' net daily change from the sources. So yeah, it went down. Now, additional data from Glassnode revealed that more than 20,175 Bitcoin were transferred by short-term holders and investors who have held the asset for less than 155 days to exchanges at a loss on Thursdays. Now, this surge to 39,034 Bitcoin on November 14th coincided with a 13.5% drop in Bitcoin's price to $92,900 from the $107,500 level. Now, this activity underscores a familiar behavior pattern with short-term speculators where they panic sell during market dips, frequently realizing losses. Now, these investors are likely facing their major downturn and chose to lock in a loss rather than risk steeper declines, transforming their paper losses into real ones. The analysis said, adding that the sheer volume of 148,000 Bitcoin being dumped at a loss represents a flushing out of impatient capital. While it does signify intense short-term pain, this transfer of coins from panic sellers to steadfast buyers at a discount price can solidify a stronger long-term base. And again, like I said, it's like these guys sold to big hands. Like MicroStrategy didn't sell any. They acquired 8,000 of that 140,000 Bitcoin, and that's just one company. There are still many others who are buying it up too. Probably not enough to make it that dip, but the hands are moving for where this Bitcoin is being held. Now, Bitcoin's price could drop below $90,000 before rebounding. So Bitcoin's latest drop below the 50-week moving average has several traders and analysts calling for deeper price corrections to sub 90,000 levels. Now, crypto analyst Jelly said that the price was in a yet another corrective period inside a larger Bitcoin uptrend. Now, Jill added that Bitcoin is likely to chop until the end of the year, or perhaps dip 5% lower, and then start pushing up again towards new highs. Now, a 5% drop from the current level would see Bitcoin go down beneath $89,300 if we have another 5% dip. Now, Bitcoin analysis Alpha BTC said Bitcoin is due for a bounce, but there's still one more dip below 90,000 to come. So this is what people are calling for online. According to Alpha BTC, a close below the yearly open at 93,000 could see the price drop lower, possibly bottoming around April lows of $74,000. Could we go there? Yeah, we could. Anything's possible. And then maybe at that point, like once we truly hit the bottom, prices are just going to go up. So we never know when it is. Just again, it's up to you when you want to get in on it. But here's the tweet from Alpha BTC, Bitcoin end of year game plan. So Bitcoin is due to bounce, but I have a sneaky feeling there's still one more dip below 90,000 to come before it happens. Then we will wait for more rates and job data, which could still be a while in the coming. But when it does, I think this is the last big dip before we hit the hoorah back up to new all-time highs. So meanwhile, prediction markets platform Polymarket project projects the difference price and outcomes for the rest of the week. The most likely outcome for Bitcoin is now $98,000 at a 70%, while a close below $92,000 is at a 52% probability, with 35% odds of a drop toward 90%. Now, the chances of the price reclaiming $100,000 are still at 50%. So these are the numbers people are predicting online. So these are just everyday traders using prediction markets to make bets. So all those predictions out there claiming 98,000 for 70%, 92,000 at 55%, 35% odds for going below 90, and then there's still a 50% chance for $100,000 going above 100,000. So people are still placing bets over. Like there's this, it looks more likely that we'll go to 70 or 98,000 because that's what people are betting on. But as Cointelegraph reported, Bitcoin could extend its downtrend to fill orders at the bid within $88,500 to the $92,000 zone. And so that's what's really going on with the markets of Bitcoin anyways. We're like, yeah, we can. Short sellers are selling at a loss right now. So yeah, that's a SODOM. Like they're trying to take their profits before, or no, there's no profits at all. This is a loss. They are trying to stop the hurt before they see any more lows. Not really believing in Bitcoin, knowing where it will go in the future. It's like, just hold it. It's like Michael Saylor called it a boring asset. Not meaning like it doesn't do anything, just boring in how you should invest in it. You buy it, you hold it, and you forget about it. That's it. You don't need to be checking on it. It's like, it's a boring asset that hold, but it grows over time. So yeah, so don't be a panic short-term seller. If you're in it, really understand Bitcoin, understand why you're getting involved in it. If it's just to make money, take your chances on the short term time, but you'll be playing this game. Or if you truly believe that Bitcoin is going to change the world and you're in it for the long haul, this should not phase you at all. And you're just going to keep stacking over time just to increase your holdings. Because again, there's only 21 million. We're at that 95% mark. And again, you're just going to want to have some Bitcoin than none when the future hits. Now is that really all of our Bitcoin news? Or, I don't know, this next article might be another Bitcoin news article, but it's about crypto over dollars and how the Belarus makes mining a national priority. So, Belarusian President Alexander Lukashenko has directed the government agencies to expand cryptocurrency mining, saying that the move could help the country cut reliance on the US dollar. Reports say he made the remarks during a high-level energy meeting in Minsk on November 14th, where he framed mining as a priority used for surplus electricity. Now, Yushchenko orders mining push. According to the state reports, Yushchenko asked officials to present concrete measures to increase electricity consumption and to lay out how mining could be scaled across the country. He suggests that rather than simply inviting foreign miners here, Belarus might consider holding state crypto reserves if mining proves profitable. Now, those comments were made alongside calls to study how energy capacity can be better used to support the industry. Now, there's nuclear power capacity driving plans. Belarus already has a significant new power source to lean on. The Ostrovets nuclear plant now has 2 units with combined generation capacity of roughly 2,400 megawatts, and officials say the site supplies about 40% of the nation's electricity needs. Now, governments and industry backers argue that the surplus baseload power from the plant makes large-scale mining financially viable. Now, a broader currency strategy. Based on reports, Minsk sees mining not only as an industry project, but also part of a broader tilt away from the dollar dependency. Lukashenko reportedly said that cryptocurrencies could be one option for reducing reliance on a single global currency. Now, that geopolitical framing links to mining ambitions, the plans for a new payment tool. The National Bank is pushing a digital ruble project and targets a phased rollout by the late 2026, starting with businesses before wider public access. Now, here was a tweet from Media One. Beyond mining, Belarus is also preparing to roll out its central bank digital currency by late 2026. Businesses will be onboarded first, followed by government institutions and citizens in 2027. Now, the project is closely coordinated with Russia's own CBDC development. Now, past signals and practical steps. Observers note that the direction is not brand new. Lukashenko first raised the idea of using excess electricity for crypto mining and earlier this year, and then since then, authorities have studied the fiscal and technical setup needed to attract miners or to run state-backed operations. Now, at the same time, a recent state audit prompted the president on demand clearer rules for crypto platforms after finding problems in how some operators handle client funds, and that tension invites mining, but tightened oversight, and it is shaping the policy mix. Now let's talk about the regulations and National Reserve idea. Officials are drawing up regular steps and talking about tax and tariff adjustments to make mining work on a larger scale, while also trying to limit fraud and capital flight. Reports say that the National Bank will sequence the CBDC rollout coordinated with the regional partners and use tighter reporting requirements for crypto firms so that investors' money does not leak out in the system. So they're looking at more regulations too there, so they got to come up with an idea there. But no, Belarus is talking about they want to be less reliant on the US dollar, a single government entity, and they're considering crypto mining, which could go into Bitcoin. And again, that just makes Bitcoin even stronger. There, he's considering, why should we let foreign miners come over here to build? Why don't we create our own? And that's like the best thing about it. So that's the best thing any country should do, to be in full control of all their mining as whatever they get from there. And then also, yeah, they're in control of their money now too. Well, they can't control the supply of Bitcoin, but it's free for everyone to use. But yeah, so no, Belarus is really considering like making this change over. So I hope they do, because again, it just makes Bitcoin even stronger too in the long run. Now let's take a quick commercial break, and then I'll be back with some more other news for you. It looks like the White House is looking up some tax plans, which is not bullish news, but just it give me the idea. It's like they're trying to gain a hold of cryptocurrencies more often. They thinking they're going to gain a big access, but it's going to be the same thing. I'll talk about this more after these messages. So bear with me, and we'll be right back.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine, Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.
Sorry, guys, I'm caught choking on some soda water. That would have sucked if I died on stage, right? Always careful when you drink or swallow your saliva. But we are back, and yes, with that commercial ad, we have so many programs and offers we have to our club members here at the club. So consider joining the Bitcoin Ben Crypto Club if you want to know more about the loans, no KYC Bitcoin purchase, or that Beef or Bitcoin initiative. Go to bitcoinben.io. Yeah, that little mic's right there. Bitcoinben.io right there. Or give us a call or text at 941-413-8080. It's rolling on down here. And yeah, when you're a member of the club, you gain access to one-on-one consultations as well as 2 weekly classes. And we do meetups here at least once a week or once every other week. But yeah, let's continue on with the news now. What else is happening? Before the commercial, I was talking about like a new IRS tax rule the U.S. is proposing. So let's talk about it. So the White House reviews a proposed IRS rule to tax Americans on their foreign crypto accounts. The Trump administration has advocated for joining CARF, a global tax reporting agreement that would allow the IRS to better identify American foreign crypto holdings. Now, my thoughts on this are most Americans, like if they're not using an American United States crypto exchange out there, they're not signing up to a foreign exchange unless it's no KYC. That's like really the only way a person would go, say, to Mexi's account, because they want to keep they go to the foreign accounts or exchanges out there because they don't have that requirement and they want to be as private as possible in the space. So I get what he's trying to do. It's like, okay, we're trying to expose the rest of like the crypto people out there who are like hiding for like, or tax evasion or whatever for like using these exchanges, but most of these people aren't using these guys. If they do, it's just probably to get a coin that they couldn't have, but everything's DeFi, and it's going to be the same thing when like trying to go after the DeFi space. You just can't do it. They can do this, yeah, so they can like align more with the other countries out there with their exchanges, but I don't think it's going to bring in as much money or revenue that they think they might be getting. Let's go to this article and see what they're planning. So the Trump administration is one step closer to approving rules that would allow the IRS to gain key information about American foreign crypto accounts and use it to tax such holdings. Now, the proposed rule from the Treasury Department regarding the United States cooperation with an international crypto tax reporting framework reached the White House on Friday. According to the government's website, the president advisors will now review the recommendations. Earlier this year, the White House encouraged the Treasury Department and IRS to impose such rules, which would see the United States join the Crypto Asset Reporting Framework, or the CARF. Now, the CARF, which was created by the Organization for Economic Cooperation and Development in 2022, is a global agreement under which member nations automatically share information about its citizens' crypto holdings to crack down on the international tax evasion. Now, dozens of nations have already signed onto the CARF, including the G7 members in Japan. We got Germany, France, Canada, Italy, and the United Kingdom, plus crypto havens like the UAE, Singapore, and the Bahamas. Now, in a sprawling report on crypto policy published this summer, President Donald Trump's crypto advisors recommended the United States join the agreement as well. Now, implementing the CARF would discourage U.S. taxpayers from moving their digital assets to offshore digital asset exchanges, and the White House said at the time implementing CARF would promote the growth and use of digital assets in the United States and alleviate concerns that the lack of reporting program could disadvantage the United States or U.S. digital asset exchanges. Now, again, it's like they're trying to stifle the people going to like maybe hide their cryptos if they did it over there, but again, people will just put it on their own self-custody wallet. That's how you keep it private. Once it's there, nobody knows it's yours, because when you set up like either a Trezor, Ledgers, Exodus, Trust, like any self-custody wallet gives you your private key or seed phrase. That's it. That's the whole thing of the crypto. Like, you can't go, it's like, well, whose wallet is this? It's like, well, they never provided a name, they never provided an email, phone number. driver's license, nothing. So most people aren't going to be hiding their assets in an offshore crypto exchange. They'll be doing it in their own self-custody crypto wallet. So I don't know what they're going to try to stop there, because they want to promote more US exchange growth. It's like they're already going to be using it if they're here for that side of it. Because if you're in the crypto space, you kind of know how to utilize the centralized system and the decentralized system for the best benefits out there. But the report instructed that the Treasury Department and the IRS to consider proposing rules to implement the CARF in the United States, and the White House noted in the report, however, that such regulations should not impose any new reporting requirements on the DeFi transactions. Yeah, because again, they know they can't do anything with the DeFi, so it should not impose any new reporting rules there. Now, global implementation of the CRF is now set to roll out in 2027, so we still a little over a year away from this. But again, this is just progress. This is what innovation actually looks like. We're actually having discussions. We're trying to figure out, okay, how do we implement this? How can we make some proper rules, make it just more transparent for the U.S. and the world to abide by? So again, this is just the process of it all. It's like not the best rules out there when we read this article, but again, this is progress. At first, before like the past couple of years, it's just been, oh, crypto's bad. It's only for drug dealers. Like there was no innovation. They were putting rules against it. So at least having this in place right now, like I'm still bullish. Like this is how the innovation works for us to be, for it just be a global thing. It already is a global thing, but this is just the progress. This is the road. This is the journey we're on for it. So again, it's not the best news out there, but hey, they're trying, guys. They are trying. Now let's continue on with the news. We got some not crypto company. We have a company planning to go global. Which company am I talking about right now? This is Steak and Shake, our favorite burger restaurant that started accepting Bitcoin payments and also setting up a Bitcoin reserve with those Bitcoin payments. So it looks like Steak and Shake now takes Bitcoin appetite global with a bold El Salvador push, and that is a great place to start. So according to reports, Steak and Shake has publicly signaled plans to expand into El Salvador after taking part in the Bitcoin Historico event in San Salvador on Wednesday and Thursday this week. Now, the fast food chain, which began taking Bitcoin in the U.S. on May 16, 2025, has been highlighting the move as part of its public image. The company also rolled out a themed menu item called the Bitcoin Steak Burger to market the payment launch. Now, Bitcoin Friendly's expansion. Based on reports, the chain first hinted at a crypto push with an X post on May 9th, 2025, saying a crypto option was coming soon. And then the payment option went live at all U.S. locations on May 16th. And the company's chief operations officer, Dan Edwards, told reporters that they aim to offer Bitcoin at all locations worldwide. Now, the messaging has been clear. Steak and Shake wants to be known as a merchant that welcomes Bitcoin payments. Now, here is the tweet from Steak and Shake. El Salvador is a great country. We were honored to be in the Bitcoin country serving beef tallow fries and handing out grass-fed and Wagyu beef tallow cooking oil, the beginning of a beautiful friendship. And here they were mentioned in the El Salvador news article. It's a Diario El Salvador, so yeah, one of their news magazines out there. But the sell spike in analysis take of this all. So reports have disclosed that that same-store sales rose 11% in the coming second quarter after this rollout happened. Later, the chain reported a 15% increase in the same-store sales for the third quarter. So they had a 4% increase from quarter 2 to quarter 3. And analysts who look at the numbers said that the crypto acceptance likely helped drive the uptick. Though direct cause and effect are hard to prove, the company's third quarter growth was compared to a big names in fast food. Steak and Shake outpaced McDonald's, Burger King, Taco Bell, and Starbucks for that period, according to the report. Now, here is the Bitcoin chart. This is showing Bitcoin's price. I don't know why they threw that in there. But social pull and backlash and reversal. Steak and Shake stirred a strong reaction when it asked its followers whether it should add Ethereum as a payment option. And about 48,000 people weighed in on it, and roughly 53% voted yes. But the poll drew sharp comments from some Bitcoiners out there. Yeah, when they put this poll out there, the Bitcoin maxis, they did not like it at all. I'm always cool with accepting all cryptocurrencies, but yeah, for the narrative of Bitcoin to continue growing, yeah, it had to stay Bitcoin. But they said, yeah, we thank Bitcoiners for helping us achieve the best same-store sales performance in our category. And believe it or not, this quarter is still registering an even higher growth rate as they were talking about it. But one critic identified as Ron Solomon Swanson wrote that ETH is just a centralized trash. Bitcoin represents freedom, and if you do this, you're going to lose all your Bitcoin customers, including me. And then later on October 11th, the company canceled that poll and posted, "Poll canceled. We stand with Bitcoiners, and you have made your choice known." Who even suggested this? I'm back at my desk. Now, based on the reports, the reversal shows how vocal customer groups can shape business choices. Steak and Shake's quick retreat from the Ethereum idea suggested that it values the support of Bitcoin-focused Patreons. And that support appears to have helped the brand within crypto circles, and the chain's publicly stance has made it take point among Bitcoin fans online. And yeah, and again, there's nothing wrong with accepting Ethereum as a currency payment because it is a cryptocurrency, but it wasn't designed to be a currency to be traded. Like Ethereum has been designed to do more than what Bitcoin couldn't. Build smart contracts on, build some decentralized applications on it. So Ethereum is more like the government's token that shouldn't have been, and the gas token, but shouldn't be treated as a currency. Like I always viewed Ethereum as digital steel because we always give names, references to these coins. Bitcoin is digital gold. It's the digital version of what gold is. Litecoin is, some say Ethereum was digital silver. I consider Litecoin digital silver. It's like the little brother to Bitcoin, a fork of its chain, 1/4 its values, and has privacy aspects. But I consider Litecoin the digital silver. But Ethereum was digital steel because, like, when you think of building skyscrapers, you're using steel and all that stuff to build it. So that's how I've pictured Ethereum because you're building on that blockchain. So you're not really using it as a currency. You can build a token on the Ethereum blockchain and treat that as a currency, but I don't think Ethereum ever should have been. So that's just really my takes on that. But yeah, so Steak and Shake is planning on expanding to El Salvador, and that would be good if they do it. So I'll keep you guys posted on this news for you. Now let's move on to Coinbase news, because it looks like Coinbase taps former Goldman Sachs partner Liz Martin to build an everything exchange. So what is the everything exchange? Like, what is Coinbase planning? Well, let's find out together, because I did not read this article beforehand. But Liz Martin, a former partner at Goldman Sachs, has joined Coinbase as its new VP of Product, overseeing markets and derivatives. This move is part of the firm's long-term strategy, which involves expanding the suite of services it offers to its customers. Now, the company stated she will lead Coinbase Exchange, drive the next phase of growth for the company's derivatives business, and manage its global markets team, all key pillars of Coinbase's everything exchange strategy. Now, Liz Martin to take up similar responsibilities as at Goldman Sachs did. So according to a statement at Goldman Sachs, Liz Martin served as a partner in the global markets business, leading an initiative across trading, technology, and consumer finance, including as head of enterprise partnerships. She oversaw business development, operations, and product launches in credit card savings and buy now, pay later offerings. Here is the tweet from Cryptopolitan showcasing Coinbase just had Goldman Sachs powerhouse. Now, Liz Martin stated that derivatives sit at the center of every mature market, and Coinbase has an enormous opportunity to lead the space globally as crypto markets reach institutional scale. Now, Coinbase has previously revealed its goals to become an everything exchange. That is a place where users can buy, sell, borrow, stake, spend, and earn all in one place. Now, Coinbase plans to add forecast markets, tokenized stocks, and early-stage token sales. And we covered that in a previous article. I forgot what the first coin was going to be. Moncoin, M-O-N. But yeah, they're rolling out early-stage token like pre-sales in a way. Now, as reported by Cryptopolitan, Armstrong stated that his long-term goal is to ensure that the platform offers the best services across the board, including a credit card that offers 4% Bitcoin rewards. The Coinbase CEO criticized the current banking system. He mentioned that it is outdated and inefficient, pointing to the high transaction fees as one of the main points. Now, we want to become people's primary financial account, and I think that crypto has a right to do that, he added. Now, Coinbase acquired two founders. I hate those pop-up ads. Coinbase has acquired two founders of Sensible, a crypto yield earning platform. Then last month, benchmark Mark Palmer reiterated the firm buy rating and a 421 price target, saying that Coinbase's everything exchange strategy proved powerfully and levered to a crypto bull cycle. Now, Coinbase plans to change its state of registration amidst expansion. In Wednesday opinion piece in the Wall Street Journal, Coinbase's chief legal officer, Paul Grewal, revealed that the crypto exchange is changing its state of registration from Delaware to Texas. So yeah, they're moving out of there. Delaware's legal framework once provided companies with consistency, but no more, Grewal wrote. This move is similar to Musk's move last year when Musk asked companies in Delaware to move. If your company is still incorporated in Delaware, I recommend moving to another state as soon as possible. And Musk wrote that in a post in February on X. Now, recent decisions from Delaware's Chancery Court have unsettled companies like Tesla by striking down compensation packages and allowing certain shareholders lawsuits to proceed. Now, this has resulted in concerns about future liability. Additionally, Delaware's annual franchise taxes are expensive, with some companies finding the cost to be a significant burden. Now, Coinbase has also launched Coinbase Business in Singapore for local small businesses and startups. It reported by Cryptopolitan, the exchange has partnered with a Standard Chartered to offer real-time crypto trading and payment services in Singapore dollars for the local businesses via the new platform. And additionally, JP Morgan Chase is putting its coin, JPM Coin, backed by cash on Coinbase's Layer 2 network base. The financial bank will first give JP Morgan Coin to its institutional clients, and once regulators give the go-ahead, the offering will be opened up to more clients. Now, the company recently reported a $432.6 million in net income on the $1.87 billion in revenue on quarter 3, and its earnings per share translated to $1.50. Much of that outperformance stemmed from brisk trading as Coinbase broadened its lineup to include digital assets covering nearly 90% of the crypto market's total value. Meanwhile, its stock has declined over 13% in the last month, currently trading at $308. But yeah, so a lot of stuff has been going on with Coinbase lately, and yeah, so they got now a new partner, Liz Martin, to build the Everything Exchange. But again, yeah, with the other article was they moved out of Delaware, they put their headquarters to Texas, and what was the other one? I know I said it on here. Yeah, so we have new Liz Martin, we got the move to Delaware. Oh yeah, and now they're also offering some ICO, initial coin offerings, pre-sale coins. I don't know how you really want to word it. They're calling it, I think, early access coins, and they're going to be rolling that out weekly or monthly. I forgot how they're going to do it, but they're going to give you more exposure to some altcoins out there that, again, aren't on every exchange. But yeah, so that's what's going on with Coinbase, new partnerships, and we'll see how that goes. Again, guys, never leave your crypto on the exchanges out there, only in your self-custody wallet, because you want to be in full control. When you sign up for Coinbase, they never provided a private key or seed phrase for you. You just gave them a name, email, phone number, driver's license. You basically gave them all your information. So in exchange, they're still holding on to your cryptos for you. So never keep your money on the exchanges. Get them off of there. Put them in your own custody. You need to take some cash out. Then you send it back over to the exchange, just what you need, and sell it then. But that's how you should really treat the exchanges out there. Now let's move on to our final news article of the evening. I started off late. Sorry, I had some morning meetings I had to do. So yeah, I'm so lost of time. But yeah, let's move on to our final article where a Bitcoin miner BitDeer suffers a temporary setback as a fire guts a Ohio facility. So that's not good. I wonder how the fire started, but let's find out. So a fire has damaged 2 buildings at BitDeer under construction's Bitcoin mining complex in Massillon, Ohio. The incident, which occurred during welding operations amid high winds, caused no injuries. BitDeer's chairman and chief executive officer, Jin Wu, confirmed that the fire on X, formerly Twitter, writing 2 buildings of 26 down, no people hurt. Senior management team is running there and will investigate further. So luckily nobody was hurt during this. But it looks like this was just a construction accident that could affect BitDeer's plans. So he later clarified that the blaze was caused by welding operations that, fanned by strong winds, spread quickly to another structure. The fire has been put out, and Wu added whether the transformers were damaged or not, and that will need to be further checked. Buildings need to be replaced with new ones, and according to reports, the incident occurred before any mining equipment had been installed. So, that's a good one, right? Because those mining equipment is very expensive. So, that's a save for them there. Now, the affected buildings were still under construction, so the operational impact on the existing mining output would be minimal. However, the damage to the infrastructure and potential delays in the equipment installation are likely to affect the company's near-term growth plans. Yeah, because they were planning on expanding their footprint in North America. Bitdeer has been one of the most aggressive Bitcoin miners expanding into the United States, operating data centers across Texas, Norway, Bhutan, and since it went public on the NASDAQ in 2023, its Ohio facility was also touted as a strategic step towards scaling up its North American presence. Now, the Massillon site, which has 26 planned buildings, is expected to house thousands of ASIC mining machines and provide over 200 megawatts of computing power once fully operational. The company, for most of its existence, has been known for supplying hardware to Bitcoin miners. However, Cryptopolitan reported on its plans to scale up its Bitcoin mining operations as demand for mining hardware continues to drop globally. Now, it has been reportedly quadrupled its mining capacity. This is coming at a time when many miners and infrastructure providers are pivoting into high-performance computing data centers and AI infrastructure services due to the dwindling Bitcoin mining revenues and increased operational cost. Now, the impact on the assessment is still in the audit process. The fire was limited in scale, and it's the first major disruption at the site since construction began, and may force the company to revise its rollout timeline now. Now, while the company confirmed that no staff were injured and no active mining operations were affected, the incident brings back to light that the physical and operational risks facing large-scale Bitcoin miners as they race to build new capacity ahead of the next Bitcoin halving cycle. Now, construction sites for industrial-scale data centers often involve complex electrical and welding work, and they come with potential for fire hazards, such as the one reported at Bitdeer's new Ohio facility. The company still has not, though, provided an updated timeline for when operations at the Massillon facility will commence, but they do indicated that its insurance and safety teams are conducting a detailed inspection right now. So nothing's been for their whole mining infrastructure at Bitdeer, it's nothing's been affected there. This was just the part of their expansion. But now this really is a delay on expanding to that 200 megawatt capacity facility. Because again, they're trying to really race to before the next halving event, because that's when we get every 2 weeks we get a minor difficulty change going on, but they're trying to beat that halving event to be a lot stronger and just ready for when it happens. But yeah, so that sucks for the fire. But again, anything happened, welding accident. I guess the most important thing though is nobody was hurt. Now that is it for the news articles for you. Looks like, let's see, we are at a fear of 22 right now. I believe we actually hit extreme fear yesterday. Oh, here we go. This is what I saw. Yeah, we are in extreme fear at 17 right now. So how much longer can we be in here? No. Again, we're probably going to be testing 87 to 902 or 102. No, 92. Yeah, 107 to 92. That could be the new levels we're retracing, or we hold this level. Maybe we see 100,000. Maybe we see 97. Again, polymarket predictions are, let's see, that was this article down here. Our percentage of what people, the public out there that are guessing on is, 70% chance we're going to go to 98,000. Well, 55% of people out there think we're going to be going down to 92. And then there's 35% odds saying we're drop down towards below 90,000. But then there's still a 50% chance that we get up to 100,000 again. So, with Bitcoin's price action, extreme fear territory, this could be the final dip, and then we start making our way back up to green. But that is it, guys, for the news. Thank you for tuning in. Again, sorry for being late today. Just had to deal with club-related stuff like always. But hey, I love working. So everyone, have an awesome Monday. It's the start of the week. If you get too paranoid about the price action, just take away of it. Bitcoin's supposed to be a boring asset you hold. You buy it, you hold it, you forget about it. That's it. You don't need to be freaking out about the charts, because in the future it is going to go up. So, so don't panic. If you are, hit the gym, go to the beach, go to the park, touch the grass, do a hobby. Just keep yourself distracted. Just forget about it. Just keep stacking to it when you can. Dollar cost average is the best strategy. If you guys need help with it, join the crypto club, because that's what we're here for. So everyone, have an awesome day, and I'll see you again tomorrow at noon, hopefully on time, for some more crypto news. So peace out, guys. Love you.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine, Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.